Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of corporations. Today we're diving into a report from Sixth Street Specialty Lending. It's not quite as dramatic as a financial thriller, but it does involve some votes, some numbers, and a decision that could affect how they raise money. You could say it's a matter of life and death before we get started. If you're into getting straight insights from company filings, make sure you subscribe. We also have a Discord community linked to the video description below. Come discuss it there. This report is called an 8K. Companies use this form to tell investors about big news or important events that could affect their stock. For Sixth Street Specialty Lending, the important event was a special meeting of stockholders. At the special meeting of stockholders, they had a proposal to vote on. It asks the stockholders to approve the company selling its shares at a price below its net asset value. Let me explain. Net asset value, or NAV, is basically assets minus liabilities. Think of it as the book value. Usually companies try to sell their shares for more than their value on the books, but with this the company wanted authorization to sell them for less. Selling shares for less than their worth might sound absurd, but it can make sense under certain circumstances. The company needs more capital but cannot sell the shares at a high price to begin with for many reasons. This measure helps them to be able to raise this capital by diluting the current shares on the market. But how did the vote go? The results show that 43.7 million votes were in favour, 4.4 million votes against, and almost 2 million abstained. Sounds like an approval, right? However, not all votes are created equal. Some votes are cast by affiliated shares, meaning shares held by people closely connected to the company. To get a clearer picture, we need to exclude those. The vote on the proposal excluding those affiliated shares was still very positive, with 41 million votes for and 4.4 million negative votes. So what does all this mean for Sixth Street Specialty Lending? Well, it now has the green light to sell shares below their net asset value. This flexibility could be useful if they need to raise capital quickly, but it could also dilute the value of existing shareholders' investments. Selling shares below M is controversial because it can hurt existing shareholders' investments. Selling shares below NEV is controversial because it can hurt existing shareholders' investments. Selling shares below volley is controversial because it can hurt existing shareholders. It best looks as the NAV companies only do it when they really need the money, or think they can use the cash to make even bigger profits later on. Now, here's a quick take. Sixth Street now has more flexibility in raising capital. This could be a strength, allowing them to seize opportunities or weather financial storms. But it also comes with the risk of hurting current investors if not managed carefully. Okay, that's our breakdown of Sixth Street Specialty Lending and what just happened. Keep in mind, I am not giving financial advice. What's your take on this vote and what it might mean for this company's future? Drop your thoughts in the comments. If this analysis was valuable, hit that like button. It helps, and subscribe for more of these deep dives. Come chat about it on Discord. The link is in the description. Thanks for watching. See you next one.